Yes, they're talking about rural recovery, and it's the third straight quarter that the company has actually delivered a beat versus expectation, and we have seen upgrades come by quarter after quarter in the last three earnings as well. This time around as well, the top line growth was 13%, driven by the high single-digit volume that we have seen. The profitability jumped up by as much as 33% on a year-on-year basis, and that was because the margins also expanded by 240 basis points. They are talking about demand pickup in rural markets. In fact, rural is actually outpacing the urban growth rate right now is what they are saying. And of course, even the toothbrush sale has been strong double digit for now. In fact, if you look at the analyst expectations and the overall, upgrades, earlier the target price consensus was 2837. That's moved to around 2871. It's not like a complete re-rating of sorts, but definitely the brokerages have been inching their overall estimates high. In fact, CLS has upgraded the stock to a hold now. The target price stands at 3157. Bank of America says that the margin trajectory could normalize, but you have Nomura saying it's an all-round beat. It's a strong gross margin performance, which is quite impressive. But what they're worried about is the risk-reward being unfavorable right now, because the EPS growth phase is almost 10% versus 26% that we had seen in the earlier years. But clearly, FMCG has been trying to make a comeback because of the entire monsoon recovery, and now you are seeing the green shoots and actual numbers as well.
You know, I just want to look at one stock, Anisha, and let's look at like the 1 year chart or a 2 year chart of Patanjali, and then compare that with Colgate. And it absolutely amazes me if I look at how Patanjali has moved in last 1 year versus what has happened to Colgate in terms of the kind of comeback what we've seen in 3 quarters from Colgate. There you go. I mean, the biggest problem point for Colgate actually was Dant Kranti, where they were losing market share and they were losing its relevance and the appeal to the Indian consumer. And Colgate has managed to make a comeback. And I'm amazed with the kind of growth what Colgate is seeing, and especially when they're choosing words like toothpaste sales, toothbrush sales, rural recovery, and we are talking about slowdown in rural India. And oral care or like a toothpaste is like a low ticket item which is deeply penetrated. If that category is going, it absolutely amazes me in terms of what is happening in some of the low ticket items. I think this is a stock which is underowned. Everybody had officially stopped tracking it. It's only last 2 or 3 quarters it's come back, so it is not overowned, not over discussed, not overhyped. And when a company like Colgate turns, I think it's going to be a multi-quarter phenomenon. It's not like going to be a 1 quarter phenomenon. So 50 times it is trading higher than the historical averages. Of course, the entire market is trading above the historical averages. But is there trend here to stay, and is there outperformance? Largely looking at the ownership patterns, I think for Colgate the ownership patterns are so low that supply is not going to be there, and the valuations are not that stretched that it really could be called as something which could be troubling even medium term investors.